Good morning, good afternoon, wherever you are dialing in from today. Very warm welcome to the GSEF Virtual Forum session on social finance. The title of today's session is The Role of Social Finance and Its Future Transformation in the Post-COVID-19 Era. Good afternoon, everyone. My name is Patsian Loh. I'm the Chief of Staff and Policy Advisor for ABPN. We are Asia's largest social investment network. We are headquartered in Singapore, and I'm very delighted that today we bring to you also perspectives from Korea, from Quebec, from Spain, as well as in Italy and the rest of Europe. So we have a global team today to share with you their insights. How shall we transform the present and build a better future from the perspective of the social and solidarity economy? Please have this question in the back of your mind and share your thoughts as we progress throughout the session in the chat box. We will be gathering some of your insights and comments and reflect on what this means for us and GSEF's work in the future. So allow me to now introduce the session. The premise of our conversation today is that COVID-19 is affecting vulnerable and disadvantaged people in society. Many social economy enterprises have been experiencing difficulties in maintaining employment, providing very important and critical services and goods, affected by lockdowns and worsening economic outlook. Regardless, many of these enterprises are still striving very hard to support their communities despite the situation. At the same time, we have very important social finance organizations that are working very hard to support these enterprises, and in many cases, only partially supported by government and other policy measures in this effort. They are providing emergency crisis response funds, they are adjusting their investment portfolios, among other measures. In fact, COVID-19 is pushing social finance to rethink how it can play a role and its future plans to better tackle the challenges that had already been existing but become worse because of the pandemic, as well as other new challenges that have emerged over time. So together with innovative financial products and other more inclusive approaches in financing, we can see social finance organizations playing a new role in accommodating communities' needs, society's development ambition. And today we'll get a chance to hear what these different types of social finance organizations are doing, whether it's an impact investor, a wholesaler, a solidarity finance organization, and an ethical bank, among other models. So without further ado, let me introduce our speakers to you today. If I may ask our panel speakers to please turn on your video when I introduce your name and wave hello to everyone. We have Mr. Milder Viegas, President of FILACTION, coming to us from Quebec. We also have Reverend Kyung Yong Sung, President of the Korea Social Value and Solidarity Foundation. We have Mr. Oscar Muguerza Tejeria, Director of Laboral Kuta.
Hello, hi everyone.
Excellent. And I want to confirm that we have Mr. Daniel Sorosal online as well. Daniel, if you could wave hello to everyone. Daniel is the Secretary General of the European Federation of Ethical and Alternative Banks. So we have a wonderful panel with us today. And to kick us off, I'd like to invite Mr. Milder Viegas, who is the President of FILACTION, to begin with a very short introduction about your organization's response and some of your work in your response to the COVID-19 pandemic. In particular, especially if you have some short stories or experiences that you want to share as you've been responding to this crisis, it would be great to use that as a way to kick us off. So Milder, I will pass the mic over to you.
Thank you very much, Patsy. Thanks to GSEF for the invitation. I am very happy to be with you and share some of the things that we're doing here in Quebec. In fact, what we can see is when the local level is more the work as we do in FILACTION. and being FILACTION being member of CAF Finance, what is nine organizations who work together in the region of Quebec, and of course as a president of INES, of the International Association of the Investors in Social Economy. In the CAF Finance and Quebec context, we work to promote and develop solidarity, finance, and development capital. In the network, we work to develop the expertise, the professionalism of these different organizations. We work to promote the social economy in the general public and various stakeholders. The nine organizations members of CAP Finance, we find the Caisse d'économie solidaire, what is related to Desjardins, one of the biggest cooperatives financing organization in the world, la fiducie du chantier d'économie sociale, risk. We have even Investissement Québec, what is a fund from the government who supports the finance, the social economy in Quebec. We have the two workers funds. That's where they have like 20, close to 20 billions of dollars in capital. One of the mandates of them is to finance the social economy. Of course, we have FILACTION and we have a network working on micro lending. So, as you see, these nine organizations, we are very broad needs. We cover all the needs in the Quebec area. Quebec is a small region, a small country, a small state. We have only 8.3 million of inhabitants. The majority of inhabitants, of course, they are close to the Montreal region. And as a point of interest now, we can say the unemployment rate before COVID in Quebec was the 4.9%. Now with the COVID, we are talking about 7.9. What of course is no all complete because we have so many measures coming from the government that helps to unemployment rate is still low. And maybe put it in the you are presenting the documents of the maybe it's three or more how you call asset FILACTION, the organization what I am the general managers is was created for the workers fund, as I said before, Fondation. We have two areas of work. We create and capitalize fund, especially dedicated to finance the underserved people or enterprises. For example, we target women entrepreneurs, cultural communities, young people, and we develop funding. So we finance the companies in Quebec, especially in social economy, but in could be in other sectors too, like the culture, tourism, and sustainable development. And FILACTION is member of INES, where I am the chair of the organization. It's an international network having members in Africa, Latin America, is more than 30 members, but representing more than 1,500 organizations because these members are often networks. For example, this afternoon, we have a webinar. We have 150 persons participating there and talking about the social economy, and that was activity was organized by Ines. And related to the COVID response, we have like three levels of next, please. We have three levels of support coming from the governments. We have programs from the federal government, we have programs with the Quebec government, and we have programs from the city of Montreal. In general, the provincial or federal government, the support to respond to support the enterprise to pass through this situation, to give and somehow retain the workforces in different sectors on different enterprise. So the most of the provincial or federal support was related to that. Uh, Now, what we are working is how this situation we transform in an opportunity. How the challenge is what we are having right now is becoming an opportunity. So the city of Montreal we have created, we participate, is not only the financing organizations, but all the organizations working in the Montreal area related to social economy. We are working together to we participate and to analyze together what is the service or what is the programs or what is the policy, what we can put it by the city of Montreal, or the city of Montreal will ask to Quebec of the federal government to put in place and support the social economy. Of course, these measures, what in the policies, what we are asking is how will complete these other measures that the organizations are putting. For example, as a patient you say before, the different organizations, members of CAP Finance, what we did is we alleviate the payments, we enlarge the process of payments of the different organizations. We give even how you call a time to don't pay the capital or even interest of the loans what we have done for different organizations. So these measures as an organization, financial organization, is complete what is the government or even the city of Montreal is doing. Next, please. Now having the COVID, well, it's still there when the second wave now, but we are working with the city of Montreal and the government of Quebec to put a new measures to support the social economy. We are, for example, from FILACTION, that's more related to my mandate as a social economic organization. We are developing a new fund that we will help the social economy to pass through, of course, COVID, but how, as I said before, too, this time is becoming an opportunity to develop and to be stronger in the future. Thanks.
Thank you very much, Milder, for that very good introduction. And it's really amazing when you think about the fact that even though you're speaking from one organization, you are actually talking about the actions of so many more as a network in collaboration with the city government as well. And I will come back to you with a question later on about some of your learnings and experiences about how managing these many stakeholders in a network have been able to lead you towards success in the programs. So thank you so much for that sharing. Let me now move on to Reverend Kyung Yong Song. Reverend Song, who will be speaking now about some of the work that the Korea Social Value and Solidarity Foundation had done as a wholesale fund to relieve during this crisis. Reverend Song, may I ask you to begin your sharing, please?
Good afternoon, good morning, and good evening. Well, actually, this year we were supposed to be in Mexico for the GSEF forum, but we are here today having a virtual forum online. It's great to see you all here, and I can really feel that we are living in a whole new era. I really hope that we can meet with all of you in Mexico next year face to face. So, the Social Value and Solidarity Fund was established about 1 year and 10 months ago, but we just begun our operation about 10 months ago. So it's a very young organization. So to give you some background, in Korea, we have about 25,000 social economy enterprises employing about 300,000 people. And what's noteworthy is about 60% of all those employed belong to the socially marginalized people. In the last 10 years, social economy enterprises in Korea have developed very fast. Government worked together with experts and civil society representatives by forming social finance promotion committee. And that was because our challenge in the social economy sector is to support qualitative growth and establish a sustainable ecosystem rather than just growing in quantity. In social finance is, of course, one of the most critical elements for sustainable ecosystem. However, in Korea, we have been lacking social finance for many years. That's why we started talking about establishing a social finance institution in 2018. The discussion on social finance started several years ago. However, it was in 2018 when the government, experts, and civil society representatives and social economy enterprises themselves came together to come up with a concrete outcome. So the civil society and private banks have invested in social economy enterprises for many years. However, the approach was not aligned with the needs and perspectives of the social economy enterprises themselves. So there was a huge mismatch between supply and demand. In 2019, we established the Social Value and Solidarity Foundation by creating a fund worth 248 million US dollars. So, in establishing the fund, the private sector will participate first, including social economy enterprises themselves in labor related organizations. So, the Social Value and Solidarity Foundation is Korea's first wholesale social finance institution. So, we do not invest in social economy enterprises directly. We provide funding for intermediary scale. So there are locally based intermediaries who receive our fund and then provide support for locally rooted social economy enterprises. So when it comes to the areas of investment, there are social impact bond, urban regeneration, renewable energy. So these are the target areas of my foundation. And my foundation is also supporting smaller retail level intermediaries, especially with capacity building programs, including those in rural areas and those who want to specialize in some industrial sectors. And we want to provide patient capital for social economy enterprises via intermediaries. The end of August in 2020, we have committed 14 million US dollars as investments and loan contract. And we are investing uh, as the first investor with low priority of repayment. So we are creating a lot of multiplier effect. So let me now move on to the impact of the COVID-19 pandemic on social economy enterprises. So there's been a huge blow to the social services sector in particular. This has been crucial for the social economy sector because 70% of social economy enterprises belong to the social services sector. So in March, where Korea was suffering from a massive outbreak, 64% of social economy enterprises suffered about 40% cut in sales. And in particular, in the southern city of Daegu, which was hit the most by the pandemic, um, the drop in sales was almost about 77%. In social economy enterprises, was in urgent need for labor cost and office rent. However, the government didn't prioritize social economy enterprises. The government targeted just the small and medium-sized enterprises in general, and there was a bottleneck in the emergency financing system of the government. So most social economy enterprises suffered a lot because of the lack of support. Therefore, we decided that we need to create our own initiative to support social economy enterprises so that they can sustain their capacity. So we created the All Together Crisis Response Fund based on the partnership uh, 20 between social finance institutions, government-funded public institutions, NPOs, private companies, and so on. So the Crisis Response Fund provided very low interest rate loans to social economy enterprises. And other initiatives include Buy Social, which is encouraging public institutions to purchase from social economy enterprises. And we have also worked with crowdfunding platforms so that customers can pay first for the goods and services provided by social economy enterprises. We have also encouraged the executives and board members of public institutions to donate a part of their bonus for social economy enterprises. We are also working with KOICA, which is Korea's aid agency, in order to support the producers in developing countries. In particular, the producers who partner with the free trade organizations in Korea. This is crucial because once the production capacity is lost in the producers in developing countries, it takes many years to recover from the damage. So we decided to provide about $1.5 million in an emergency funding. So we have provided support for about 40 producer groups in developing countries, and we will continue to provide this kind of support. So we are working hard to sustain the social economy ecosystem, not just in Korea, but also globally. Moving on to transition in the post-COVID-19 environment. Now, the pandemic is also demonstrating the urgency of the ecological crisis and also leading to a rapid transition in the organization of industries. One case in point is the rapid growth of platforms. So we want to provide support for platform workers so that they can establish their own institutions to support themselves. So we have been supporting platform workers in 6 different sectors, and some of them have already organized a mutual aid society, uh, which is expected to attract about 3 million US dollars, which will become the seed money for the mutual aid society. So this will help the platform workers to survive the pandemic and gain more economic independence against the large platform businesses. So my foundation is providing funding for the mutual aid society, and at the same time working with relevant government ministries and members in the parliament so that we can come up with a better legislation to protect the platform workers. Thank you for listening.
It is really amazing to hear how quickly, as a wholesale fund, you've been able to mobilize the different stakeholders in Korea to support the social economy during this time. I'm especially interested to hear more about why and how you've identified some of these areas like platform workers and supporting intermediaries as areas for the fund's support, because those are very critical, but may not always be the first areas of support when we think of COVID-19 relief. So we'll come back to that question to you, Reverend Song. In the meantime, I'd like to now also introduce our third speaker, Mr. Oscar Mugueza Tejeria from Laboral Kutsa, to share a bit more about the work that they've done to respond to the needs arising from the pandemic. Oscar, if you may please take the microphone.
Okay, thank you, Patsy, and thank you, the organization, for this opportunity. Just to share with all of you our, I don't know, knowledge, or what at least what are we doing here in northern Spain, in order to support and to help social economy and unemployment and this kind of things in this moment, in this very difficult moment that we are living. Well, I will start introducing myself. I'm Oscar Muguerza, working for La Boyal Cucha. I'm head of business banking, which means we are a bank, a cooperative bank. And head of business banking means but to work in the development of products, development of the structure or infrastructure, just to provide services to our clients, and also to foster the business, because we are a bank, we are, I will say all the time, just trying to be better and trying to provide better services to our clients. We are part of Mondragon Group. I guess that most of you are quite familiar about Mondragon Group, which is the biggest cooperative group in Spain, and one of the biggest at least in Europe. With different parts of cooperatives, big strong part of industrial cooperative producing goods and different things. And I am in the part of the bank, which the name is La Boyal Cucha. We are a cooperative bank, a different cooperative bank, because the members or the workers the workers were members of the cooperative. At the same time, the cooperatives of the group are members also of the cooperatives, and we have a part of clients that also are members as well. Well, you can see here a cloud of words. Some of them are the typical words you can arise in your mind if you are thinking in a bank, like loans, like working capital, financing, internationalization, agreement, guarantees, liquidity, investment, cash scheme, all of these things that are usual in a bank. Also, the bank, we do these things, but at the same time, we have different approach also. In our mission is always to talk about cooperatives, to talk about social economy, to talk about equality, to talk about entrepreneurship, employment, that we spend a lot of time and energy in this kind of things because it's part of our DNA, no? From the beginning. If you move to the next slide, please. Just to give you some facts and figures about the bank, Cooperative Bank, La Royal Cucha. We are founded in 1959 just to finance cooperatives. At that time, in the 50s, in this area, was after the civil war in Spain, and was the situation here was quite bad, no? In economic, talking about economical approach and also political approach, and also we are the losers of the civil war, no? So the situation was not very good. At that time, one priest, Jose María de Mendiarreta, started with the idea of, okay, we have to do something here to create employment and to share the wealth, no? Well, to create and to share, not only to share, also to create, no? And started with some education programs we have in the group at university also, and started the German of the different cooperatives, and was quite clear that we need a bank just to finance this cooperative. This is the origin of La Royal Cucha, and also I will say that is one of the secrets of Mondragon Group, because to have a bank just to provide services to the different cooperatives and just to finance at that moment was very, very difficult. I just show here one of our more successful slogan, and one of the first slogan we use just to get liquidity with that, to get savings from the people, was libreta o maleta, which just means, translating to English, savings book or suitcase. No, that means that, okay, if you don't save money, you have to migrate. Was the insight behind the slogan. Was very successful, and our people was knocking door by door, just saying, okay, we are the new bank, we are working just to support the economy and this kind of things. And right now, from that origin, we are our bank. We are small in comparison with our competitors. We compete face to face with the big guys like Santander or BBVA that are 60 or 70 times bigger than we are, but we are 2,000 people, more or less. Well, you can see here these figures. I'm not going to explain all of them, but in terms of total assets of 21 billion, and one profit that worth more than 100 million per year, which is why, well, it's not bad, no, we say. And things we do is we are very focusing back in entrepreneurship. We have a foundation called Gas Empresa. We support around 400 projects or new businesses every year, not only financing this new business. Also, we provide technical assistance. We assign like a coach or a mentor just to help from all the process, working on the idea, working on the people, just to providing education, providing training, and doing the business plan, and helping with all the bureaucracy also, because we are very committed just to develop a new business and to develop employment. No? It's one of the aims for the bank, no? To develop employment. For us, social economy is like an instrument, just to provide to develop this employment and just to create and share the wealth. No, please, if you can move to the next slide. And also, I will introduce the ideas of we use during the COVID-19 response. No? Well, as in all the world, the impact of the COVID-19 was huge. No, we have in Spain, starting in March, 2 months, or a little bit more than 2 months of confinement. Everything was closed, working from home, and we are living now in the second wave. We are very worried about the second wave, but it's increasing day by day. We don't know what is going to to happen in the next weeks. So we are still involved in this tsunami. No? This sanitary tsunami or health tsunami means that also there's a second wave of economical tsunami, which the GDP dropped more than 20% here, bankruptcy, unemployment, revenue drops, all these things you have described for different speakers from the beginning. And we say, okay, it's time to demonstrate. It's time to say, okay, I like this sentence. The main thing is to keep the main thing. We are a bank, then let's do banking. What's what we do? No, we say, okay, back to basis. Let's do banking state to demonstrate what we convert all our activity like a financial hospital, no? And what's the first effect of this tsunami in the economy, in the different economy? Was they need liquidity. They need liquidity just to pay the rent, to pay the people, to pay suppliers, to pay everything, but because it was a huge drop of their revenues. Then they need liquidity, and we convert all of our activity, all our people focus on this. We granted more than 1,000 million euros in these 4 months, but in 2 months we granted more than we were forecasting for the whole year, or even more. No? It was incredible. Our people working most of them from home, in distance with the clients, and also working on weekends, no weekends, no holidays, nothing. No? Okay, if we move to the next slide, please. And the post-COVID-19 environment, I would say we are still in the COVID-19 environment, but for the COVID now environment and the crisis is going to be for many. Our forecast is going to be for many months and maybe for some years. No, back to basics again. We have to do banking, and we have to support viable projects. It's still. The businesses are fighting for their I don't know, sorry for my English, sometimes I am getting rusty. They are fighting for their future, no? And we have to support the viable projects. And also it's kind of collaterals. I would like to remark here one of the instruments we have with especially for social economy, which is one instrument of the European Investment Fund, that is under the instrument of employment and social innovation. We have a line of 50 million euros just of collateral. European Investment Fund provide us collateral just to finance social economy. We started in 2017 with this, but right now is very, very, very helpful just to finance different projects, no? Especially the social economy projects. Also, there are some Spanish public instruments that is kind of collaterals because the projects, the figures of the projects are not very good right now. Also, for provide loans, is kind of collaterals. Then we are not, especially in social economy, is very hard or difficult just to ask collateral to the enterprise. And also we look in different instruments that we are all the time looking for this instrument, because we know that is very helpful, no? Also, I will say as a banker that the resilience of the social economy is absolutely true in this time, and in the past times, because the non-performing loans or the delinquency of the loans is maybe less than the half of the enterprise that is not social. No. Well, that means that we have to put a special focus on social and solidarity, solidarity economy, just to help that not only financing, also with advice, also with technical assistance, and with our foundation, just to foster the entrepreneurship. We are also very focused in these new projects. We have a lot, and then, and also because we have the infrastructure in just to provide these services, we're taking advantage of that. No, yes. For example, doing initiatives like we call SOS mentoring. That we have a team of 150 mentors, just to help the businesses in their development. And also we have developed a very short and strong program just to do this, to provide this Mayday mentoring, no? And also we work adapting the business plan or providing solutions and training that, for example, just to sell online, things like that, because you have to reinvent your business plan. And the future, we are forecasting a rise of the entrepreneurship, no? Because unemployment and entrepreneurship just to provide to create new businesses is very linked, and also still the unemployment is not rising here, but we forecast for next year that a very peak of unemployment. So we have to be prepared just to welcome new entrepreneurs, just to help them, and we are working hard in the different instruments just to provide taking advantage of the infrastructure we have created in the past. But also creating new things. And just to finish, I don't know, I am going to prove there. When you see there is always another way. This is our slogan. At the beginning it was libreta o maleta, but there is now the other one. I don't know, ask to the people who is moving the slide, if you can click there is a commercial, or this is a very, very short video. If you can see there, this is very risky also in the presentation. Yeah, well, you can see the subtitles. We are losing the original sound, but you can find out on YouTube. Okay, thank you so much, and I'm ready for response for your questions. So, thank you.
Thank you very much, Oscar. And, it's funny because you're saying exactly that the main thing is the main thing, right? Keeping to the main thing. And the main thing here, interestingly, as I'm hearing your presentation, is that while we want to see more success and sustainability of these enterprises and entrepreneurs, it's so critical to give them the support they need beyond financial capital so that they can continue to sustain their businesses also through this time. So I'm very interested about the technical assistance, mentoring, and support that you're providing to the members and the entrepreneurs. So we'll come back to that.
Okay,
I'd like to now share with the invite Mr. Daniel Sorosel from FIBIA, who will be our last presenter for today, and to share his remarks about the work that he's been doing with the Federation. Daniel, the floor is yours.
Hello, thank you for the invitation. Unfortunately, our president, who was supposed to speak today, has tested positive for COVID, so he's at home, safe, but at home. So he asked me to stand in last minute, and I'm quite happy to oblige. It's not my presentation, so I will probably deviate a little bit from the content because our experience has been a bit different, let's say, in the front line from that of our president, but we will try to follow you through that. If you move to the next slide, I will make a small introduction on who we are. So FIBIA is actually is an interesting story. It came out of a failure and it transformed into something positive, let's say, over time. In the late 90s, 5 of our members, actually our founding members, were actually all starting ethical finance activities in their own way, in France, in Belgium, in Italy, and in Spain, at different speeds as well. And there was a project to actually merge and create a kind of pan-European ethical bank. That was the project. And after long conversations, I wasn't there, but I've heard the story many times. This failed. One of the parties, I think the board changed, and the new board didn't want to continue, etc., etc., and that project collapsed. But after so much working together in trying to learn how, because we're in late 90s, so this is still quite a pioneering work, they decided there was a bit of a waste to lose all that. So they transformed that group into a network, and then they opened it to others. So the first 5 opened to, I think it was about 25 first, and then since then we've been around between 25 and 30 members, up or down, since. The reason why they created this network was that many of them were alone in their country. So they were the only ones doing social finance, or at least there were very few people. So they had to look elsewhere in another country to find somebody like them. And this was for I would say a beginning, for a good part of the time. The purpose of FBA was basically a place to share experience and to learn what others were doing. FBA was founded in 2001, so we're going to be 20 years next year. And since then, our activities have obviously developed quite a lot as a network. But in a nutshell, what we do is represent these 28 organizations. Some are banks, some are non-banks, about half-half, which together combine 30 billion euros in assets and basically reach directly or indirectly around 700,000 clients, which in the banking world is not really much. But at least aggregated, it shows a certain, I would say, equivalence to the weight of the social economy within the economy. And what we've done since is work much more on this interlocution or this close relationship with the European institutions, which have become a very strong partner for us over the years. The more they have shown an interest in social economy. If you move to the next slide, please. So as I said, we were already working quite actively with the European institutions. We participated in the design and implementation of this European social innovation program that Oscar was mentioning before. So since its launch, we worked hard that our members will be well positioned to distribute basically a guarantee and funding program for social enterprises. We wanted our members to be the intermediaries, basically distributed this product, and I think we're quite successful in that. And then when COVID came, we were faced with a kind of a new reality. First of all, the pandemic meant a sort of immediate, I would say, shutdown at first. So nobody was in the office, everybody was at home, and nobody knew what to do. So we started to get calls from the European Commission saying, what do we do? I mean, this is going to be a huge economic hit, and we don't know what to do. At the time as well, most of the measures that were taken individually by each of the countries without much coordination as well. So the European Commission was particularly lost in that world because they were slower than countries and they don't have a political mandate always to take measures. So we started acting as a bit of a counselor. And we realized that at the speed things were moving, that there was a big risk that the social economy would be forgotten in the package. A lot of the measures that were taken, we're talking April, May of this year, were directed to either large enterprises or to SMEs. But few people were worrying about the social economy, which was a bit forgotten. So our first task was actually to make sure that we could keep that on the political agenda. And then try to turn this being in the political agenda into fact. And this has been the essence of our work. So at first what we did was look inside the network and see what everyone was doing. And we published a document with examples of the response to the crisis by by each of our members. So the link is there. Basically, most of our members, we were either aligning or improving on the measures taken by the government, which were all about providing liquidity and providing, let's say, respite. So most countries introduce measures that would postpone payments of capital and sometimes interest as well for loans for 3 to 6 months. So we're coming to the end of that period now. We will see the effects of that. And generally, this was mostly mandatory for banks, but many of the non-banks had to align to that and introduce their own measures in the same level. And next to that, there was a lot of, let's say, coaching, as Oscar was saying, of social economy organizations in terms of how to deal with their respective problems, being very close to your clients, participating in fundraising campaigns, and introducing all kinds of creative measures that would basically alleviate the situation of your existing partners and social enterprises. That was basically what our members were doing, but it was important to give it visibility. So we published this document. We participated in a number of webinars organized by the European Commission to basically make the issue visible, that our members were very active. And thanks to the work and also to the intrinsic, let's say, nature of the social economy, this sector was showing much more resilience than it was expected. But at the same time, it was forgotten, because it's important to realize that many social economy organizations in Europe are often dealing with health, care, rural development, education, social insertion, social work, even culture or tourism. So actually, they were typically in the sectors that were most hit by. They were not in digital sectors. They were not in sectors that they were on face-to-face sectors with real people, which were actually most hit because of people were at home, and many of their activities were stopped. So after giving this visibility to our sector in terms of how it had organized itself and provided a response, next to, of course, in the same period, learning to work from home and using every digital tool available, then we decided to transform this into action. So we did an internal survey with our members to see, okay, what would you need in the months to come to cope with this? Surprisingly enough, nobody asked really for funding, they had enough, or for specific measures. What they were really interested in was actually coverage, because they could see the risk explode in a number of months to come later. So I would say we reached not exactly our full objective, but we reached a decent objective by putting together a series of measures we would recommend the European institutions to include in an existing program that we were using already. So they wouldn't have to create anything new. They would have just to adapt. We wrote to the European Commissioner and to the President of the European Investment Fund, and then we lobbied hard so that our voice would be heard. And basically what we got is that every loan that was already covered by this guarantee program, the coverage would increase, so up to 90% per loan. The amounts that you would have lent will also increase, so you would be covered up to 1 million euros per client instead of half. And generally, we got a lot more flexibility within existing measures that could be, let's say, applicable almost immediately. This was more or less confirmed by June, and the amendments to all the contracts are actually happening now. They've been happening since September. So basically, for a period of 1 year, retrospective, so starting, I think it's in May, our clients will be covered for all the loans they did when they had to provide liquidity in a rush, and all the loans that will come later when liquidity will run out, probably by the beginning of next year. They will have a specific and enhanced coverage for their risk, which was actually their main preoccupation. This is an example of what a second level network can do in terms of, let's say, political lobbying, which is not our only work, but certainly one that has been most useful during the pandemic. If you move to the next slide. And now we are basically trying to work on more long-term measures that can help us, let's say, face the future. Which is, since we don't have a crystal ball, we need to understand a little bit where our world might be going and which measures could be taken. And then we are talking on much more, let's say, fundamental measures. Now we don't need to tweak an existing instrument, we need to change certain things that are already written in stone. So we are now working together with others on generally stating our difference. I like this slogan of that there is another way. This is exactly what we are doing. They're showing that there is another way. And by stating our difference, we want to get more recognition from the European institutions and ideally the national regulators as well on the role that social economy has, and us as the financiers of the social economy have as well in terms of keeping this sector alive and kicking. This means that we have to work much more on trying to modify in the midterm, I would say, capital requirements, which basically limit our ability to take risk and create social impact. They are not designed for us; they are designed for normal banks. And actually, we think there is a window, small window, to try to emphasize that in a post-pandemic situation, the ability to create social impact and the ability to take risk in sectors that are maybe not in the minds of policymakers at first will be key, because they will be key in terms of creating, let's say, improving the welfare and the social conditions of people. So we are working on that. And at the same time, we are also working with the European Investment Fund, which is kind of the distributor of public money, let's say, from the European institutions to us in the design and implementation of the programs that will come in the 2021 to 2026 period, which the existing programs happen to run out now, and they are planning the future. So we are working with them on that in terms of improving the existing instruments on guarantee coverage, and also start to touch on equity or quasi-equity instruments, which is something a bit forgotten. So we are able to lend, but not to invest. Besides that, we are also working in gaining legitimacy to our, let's say, ethical banking model. And not necessarily focus on growth, but also focus on consolidation, improving much more the work we do at second level as an organization, and partnering and exchanging with a lot more other people, because advocacy is a job that you do together with others. You cannot do it alone unless you are very, very big, and we are not. And generally, I think towards the future, what we are trying to show is that we need to change the economic model. That our economic model has brought us to here. But the future looks very bleak unless we start to change it radically. So we want to be actors of that change and also proponents of that change and examples of that change. So this is, in a nutshell, what we do. I don't know if there is one more slide. I think there is. No. So in any case, this is in a very brief address what we did in the last, I would say, 6 months. And we foresee that our work will be equally intense in the next 6 months to come, because the pandemic is not over, and because many of the measures that were taken were temporary. So we have to see now the effects in real life once a lot of these temporary measures run out, in terms of increasing unemployment, in terms of basically close down of companies, and generally many sectors will be hit now by the second wave. When they were weak, they will be weakened again. So we have to also think on how to develop specific measures for the sectors that will be most hit, and they are not always within our client reach. So we have to also rethink our role probably in the future as well. Thank you very much.
It's really interesting and perhaps quite coincidental that we are hearing you close on this note, because at the end of the day, we also need to look at this as not just a temporary phenomena. This is a challenge that we're facing with in the long term, that has long-term implications and may in fact challenge us to transform the way we see the role that finance plays in establishing a social solidarity economy. We have approximately 25 minutes left for the session, which I'd love to invite our audience to please ask your questions in the chat box, and I will raise them to the panelists for them to answer. But to begin with, maybe I could just kick off with a few questions to our panelists, and I would like to address some of my questions maybe to a few panelists in one time. The first question I have is going to be addressed to both Reverend Song as well as Mr. Oscar from La Barracuda. Reverend Song and Oscar, if you could tell us a little bit more about how did you decide on which parts of the ecosystem's gaps or needs that you thought was most important for you to address? We heard from Reverend Song's presentation that they saw there was a need to support the platform workers and also the intermediaries that were very important in the social and solidarity economy. We heard from you, Oscar, that Laboral Kucha was very focused on the liquidity needs of the members as well as the entrepreneurs. Going forward, how will you identify what some of these needs are, and you know, will you see potentially that by focusing on these needs that you are providing a more comprehensive support for the social and solidarity economy? Maybe I'll ask Reverend Song for you to speak first, and then we'll come to you, Oscar.
So listening to the presentations from Laura Kotza and FILACTION and Bankatika, I learned a lot and got a lot of inspirations. First of all, I'd like to thank thank you for asking the question. So the question is about how we decided to target platform workers and intermediary organizations as priority. First of all, platform work is growing rapidly in the pandemic, and the platform workers are hit hardest. That's why we decided to prioritize these workers. Now, platform workers are suffering from the precariousness of employment and the fragmentation of labor. I mean, there is no labor union to protect them. And the platform workers were in the blind spot of many of the government's support policies. Fortunately, now the Korean government has introduced the concept of the essential workers in coming up with new measures to support them and remove the blind spot. However, the need to support platform workers is urgent in the era of Industry 4.0. So the platform workers are suffering from individualization or fragmentation of labor. So we believe that they need to have a self-supporting structure. And personally, 4 years ago, I started a study group, a small study group on labor in society. And it was in this study group that I learned a lot about the implications of platform work in the era of Industry 4.0. So the study group's name was Labor and Social Economy. And I have thought a lot about how to link labor and social economy. And it was quite evident that platform workers were hit the hardest in the pandemic. So the Social Value and Solidarity Foundation decided to help them to establish a self-supporting financial structure. So we started with a mutual aid society, and the amount of funds will be about $3.5 million. So I hope the platform workers can protect themselves and support themselves better with the mutual aid society. The second, the targeting intermediaries. So from my perspective, financial support can be when the providers are close to what's happening on the ground. And those who are closest to the ground has the best knowledge about the needs of the social economy enterprises. So, for example, I'm in Seoul and I can find out the specific needs of a social economy enterprise in a southern city of Busan, for example. Locally based intermediary institutions are still quite small, and not very active. So we decided that we need to nurture them so that the blood can flow to every corner of the country through social finance. Ways of providing finance and the amount of funding are decided in partnership with these intermediaries. Thank you.
Thank you very much, Reverend Song. And indeed, many of these intermediaries are very critical to successful support and intervention, particularly in areas of very wide geography. I'd like to ask Oscar if you could also share your views about how you have identified some of these critical untapped areas and how the organization is intending on continuing to provide this type of holistic support for these untapped areas.
Yeah, thank you for the question. I will say that it's quite easy for us just to target the main issues, just to develop. It's a question of matching. What are you doing? What infrastructure do you have? What are your strengths, and what are your business or your activity usually, but what are the needs of the clients? In our case, it's easy because we are in very close relationship with clients, with the businesses, and with the social economy, because it's our business model. We have branches just to provide services. We have relationship managers, more than, I would say maybe we have 1,400 relationship managers directly contact with the clients. So it's immediately, it's from one day to another, we know what is the client what are the client needs. No? So then you have to match with your strength, and okay, they need liquidity. Let's provide liquidity, and at the same time we have to look at the different instruments just to provide collateral, or just to make this process more fluent. In this case, we say, okay, we have the European Investment Fund program, yes, ready, yes, for one day for another. Yes, we foster the activity. Those. No, it's a question of what would you do, what you are doing, what are the needs of the clients. No?
I think it's an absolutely on point observation that in order for us to meet the needs, you do need to match with what the organization can do best as well. And one of the questions that stem from that I actually will now want to direct to both Milder and Danielle is that you are both working within a networked environment. Milder, you're working with a consortium of 9 organizations. Daniel, you are representing an association, a federation of many different financial organizations. What in both your views have been the unique way that networks, groups of organizations that come together, have been able to play a role in building the long-term post COVID-19 recovery? Tell us a little bit more about why you think this networked approach is so important. Maybe I'll start with you, Milder, and then I'll ask Daniel for you to respond as well.
Thanks. Your question maybe for me is on 2 levels. So one of them is more regional, we're doing cap finance, and maybe the second part is more broad, international. In the local level or regional level, what we are doing in cap finance, how it's important to be together. First is to know what is happening with others. Because, for example, few weeks, 3 months ago, we did a kind of research of each organization, how was happening, what was happening, for example, about the delinquency of loans. What we knew from there is that wasn't that bad, because as Daniel said, the resilience of the social economy is so high. So that's, for example, in my organization, we are talking about that the high risk is around 2%, medium risk is around 13%. So when we see with the other organizations we're doing lending, is around 15% of medium and high risk. So we see all the organizations were in the same level, and the situation is not that bad. So the first thing was how it's important for us is to know what is happening. That's the one aspect related to the question. The second aspect is how together we can propose new policies to the government to support this initiative, this social economy. For example, for us, what we did is knowing what is happening in this pandemic situation is we are providing with private money and government money technical assistance to the social economy enterprises, how to change their model, how to improve their model. How we can do that is because we are in a network. So the first, I think, thing how to work or why to work together is to share the information. And of course, is for example, just today we have a meeting in all groups of Finance how we can support with new products, new sectors on the social economy, because even in the general society the problematic situation is not the same for everybody. In the our as I said before, my our clients is not that bad situation, but the only groups where have some problems is the tourism, but even though the cultural sector, but so the technical assistance is to analyze, to evaluate what is happening in this organization and how we can change or improve their model. So that's we can do it because we share the information. That's more in a local or regional level, but in more global level, as Ines is how to share information to create policies to develop the ecosystem. Because talking about money, lending money in Quebec, for example, we have enough money to finance the initiatives. What we need is, as I said before, the money for maybe special sectors where we need or we must to be present. But in general, to lending money there is money there. But for the technical system, how we improve, that's what we need. But in the global sector, for example, we're talking about Africa or Latin America, is how we help to develop this ecosystem, how to be recognized, to the ability to manage the phone, how to recognize as a partner in the application of the public policy, how we promote the social economy. So that's why we need this global network.
Mm.
Thanks.
Thank you very much, Milda. I think indeed the network approach does play a very big role for advocacy and also looking to advance any policy changes. And I think, Daniel, you mentioned a little bit about this earlier in the end bit of your presentation. Maybe you can just give another 20, 30 seconds or so of any further insight or outlook you have for how a networked approach will help us advance the work that social finance can do.
Okay, very quickly, I think there are three levels in which a network helps. So what we are doing since basically since September, since we realized that the pandemic wasn't over, there was going to be probably another 6 months or more. We have had like individual chats with each of our members because we don't see them anymore to really understand individually what they are going through. That's a first, which is something we can collect together and helps us design, let's say, policy suggestions or recommendations. Then we have created a new space, which is specifically for advocacy, where a number of particularly motivated members who have the means to do advocacy, we discuss collectively which approach to take, which response to give, etc. And then as the network itself, obviously, is this flow of information going first horizontally between members. What are the others doing? Because everybody's was in a bit of a panic. I think less now, but they needed to know about what was going on, and also, let's say, vertically, it's about translating. So basically, we are particularly we're in a specific situation. We are in Brussels, we're dealing with a very complex animal, which is the European Union. So just understanding what's going on and explaining it to our members, let's say in plain vanilla, and vice versa, collecting these views from our members and giving them shape to this advocacy group, and then transforming it into messages that are targeted to the right people at the right place at the right time. It's, I would say, something that only a network can do and only has the legitimacy to do. Our individual members, however big, they couldn't reach the same people as we can. However, without their, let's say, combined messages, our delivery channel is useless. So is this imbrication of, it's being an extension of, it's being sort of the Foreign Affairs Department mutualized for all of our members, what we do.
Right.
But also explaining both ways, because reality is complex and not everybody has the time to take and actually analyze what's going on. So it's these two things that we do more.
Right. I think that's one point that maybe later on I'd like to come back to everyone for a quick closing comment about, which is what can we do to work more closely together as social finance providers and intermediaries to advance the contribution we can make to the social and solidarity economy. I'd like to just quickly pick up one of the questions that had come up in the audience. And I know, Daniel, you had answered it in the chat box, but I think it's an interesting question for everyone else to maybe comment a little bit, which is a question about, is it, the audience feels that there is a slowdown possibly in the investment in startups post-pandemic. And, what are your respective views about how startup investing may be affected? Daniel, you had responded with your observation that it hasn't actually particularly slowed down. I'm wondering whether between Oscar and Mildred, if you have a view on that as well.
As I said, we see a small slowdown on the financing. Is not because the money disposition, is because the people in some sectors, they are more eager to develop projects. But in other sectors, for example, just today, Wednesday, we will launch a new fund in the tourism industry. What we have several years ago, a 5 million fund. Today, we will launch a 11 million fund. So yes, there is money there, but there is a sectors, yes, we will have some problems. But the money for the investment in the social economy, especially here in Quebec, we don't have that much difficulty.
Oscar, do you have a view on this? And I actually can see that same audience member, Mr. Jean Fabre, has added a question about whether there is an opportunity to even consider pooling the capacity of major cooperatives to encourage more such financing.
Yeah, I would say that it's not a question of COVID-19. No, it's not a question of Miller said, no, it's a question of sectors, depending on the sector. For example, in this foundation, just to support the entrepreneurship I referred before, of course, we are receiving half of the usual projects. No, that's because people is, I don't know, if you are thinking in create a restaurant, it's not time just to create a restaurant right now, no? But maybe it's time just to create a grocery, or it's time to create a convenience store or something digital, just to foster the digitality of the businesses. Or there are the new project that I would say that the things are changing and you have to adapt. But our aim is just to be prepared, because we are forecasting a wave of entrepreneurship for next year. We are forecasting a new projects. That's because the unemployment is going to increase, and that is a very close link between unemployment and entrepreneurship. And also, for example, we are digital in our process just to be more efficient, just to increase the scope and also the different financial instruments. No, it's not that for me. It's not okay. COVID-19. Okay, forget it. No. It's just the opposite.
I think that's a really positive way to actually looking at it, because I think sometimes in crisis we get to see new opportunities emerge. And this is where we can see potentially other ways that we can see startup financing and entrepreneur financing be redirected as well. We are running out of time, I'm afraid. In the last couple of minutes, I'd like to pose a question for the panelists. If you can just maybe share a very short response. Oh, sorry, Reverend Song, yes. Yes, please.
Right. Here's a question. I'm sorry. So there was a comment about a possible slowdown in the investment in the pandemic. I'd like to answer that to that comment or question because there is a project in Korea going on regarding that situation. Can I say a few words?
Please, go ahead.
So there is the economic crisis with the pandemic, and I believe it is true that there is a slowdown in the investment in startups. It's not just in the social economy sector, but also in the general economy. In the social economy, enterprises in the pandemic are in need of a medium to long term investment as well as emergency support right away. And we are receiving such demands a lot these days. However, I believe that we need to have a medium to long term perspective to create the necessary infrastructure and investment policy to support startups. In particular, we need to create opportunities for the youth to start businesses. So the Social Value and Solidarity Foundation is working with KT, which is the largest telecom company in Korea, in order to support social ventures or social economy enterprises that are solving social problems in a very large scale. This project will start implementation next month. We're going to create an award so that the winners can receive a huge amount of money. And the Social Innovation Fund created by my foundation will continue to invest in the winners so that their innovation can continue. So the amount of the award money would be about $100,000 per enterprise, and we're going to select more than 10 enterprises, and we are going to track their performance. So after 1 year, we're gonna provide another $100,000 for the best performing enterprises. So I really hope that the young people can have the opportunities to start businesses in order to solve the various social issues related to the pandemic, economic crisis, ecological crisis, changes in the digital economy, and so on. So I think the supports from social finance institutions should be balanced in terms of the short-term and mid to long-term perspective, and also when it comes to the target group, which is a youth in this case, and we plan to expand our support and the amount of award money.
Thank you very much, Reverend Song. I think it's a really interesting. Sorry, I didn't realize I was muted. Apologies. Thank you very much, Reverend Song, for your closing comment. I think it is great to know that it is indeed important, in fact critical, for there to be infrastructure and policy that will catalyze entrepreneurship. As Oscar had pointed out, even in his case, he is expecting to see a next wave of entrepreneurship emerging as well. So the more that we can encourage that development in the social and solidarity economy, I think it would be good news for how we can build resilience post-pandemic. I think we are running out of time, so I'm afraid I will have to wrap up the session. I once again want to thank all of our panelists for sharing this very diverse, but yet, in some way, very consistent view about the importance of being able to work with partners, the importance of being able to strengthen the ecosystem of the social and solidarity economy development through social finance, whether it's in the form of investment, in the form of liquidity, enterprise funding, technical assistance, wholesale funding, and other forms of innovative financing that are occurring to support social protection. But also that all of our panelists today talked about the importance of strengthening the ecosystem in terms of building capability of entrepreneurs, in terms of bringing more opportunities between different stakeholders in the financing ecosystem to work together, in terms of engaging with policy to look at how they can better support some of the overlooked areas. And so that we see that it's not just the injection of capital, but also the strengthening of the system that the social finance players can take a role in. The example that we are hearing from both FILACTION, Cap Finance, and the work with UNICE, as well as the Federation of Ethical Financial Institutions that Mr. Daniel represents, it's a clear need for there to be a coordinated response among various stakeholders in the ecosystem, both in the private as well as public sectors, to pace each other and complement each other. When there are different needs or different urgency of response. So all of this is really telling us that it is a good opportunity also to look at how social finance may in fact become mainstream finance, where in the post-pandemic environment, having a clear commitment to social and solidarity is maybe the new way for finance and the finance ecosystem to evolve. So on that note, I'd like to invite anybody that is in the session today who has a further interest to know what we can do together in a networked approach to advance social finance and the role it plays in post-COVID-19 recovery. Please to contact the organizers. We'd love to hear from you. I'd like to also ask for all of you to please have a virtual applause and thanks for our panelists today and their sharing. Thank you very much to all the panelists for your time. And I also thank the audience for your participation and attention. We will now call the session to a close. Have a very good afternoon and good day, everybody.